Bitcoin rising. Is this a breakout or a bull trap? Hey guys, it's Keith Allen. Welcome, my friends. Welcome to BitBreak. Bitcoin moving and lots to talk about today. Before we even start, I just want to ask you a very simple question. If you think this Bitcoin rally means the bear market is over, you might be right. But if you think this is just another bear market bounce, you also might be right, because the chart is sitting at one of those rare moments, a critical inflection point. Break it, and the rally probably continues. Reject it, and this move could unwind really fast. Let me show you exactly what I mean. Before we climb in, real quick, welcome. My name's Keith Allen. I am a full-time trader. I'm a work-from-home dad, and I'm co-founder of Material Indicators. Glad to have you with me. If you're new to the stream, welcome. If you're an OG, oh man, I really appreciate you guys. Do me a favor, if you would, smash some buttons. Help me grow the channel. You know how this works, right? You guys engage, and the algo loves that, and quite frankly, so do I. I don't give a shit what the algo thinks. I really like it. So the more you engage with me, actually, the better this becomes for all of us. So live chat is open. I encourage you guys to ask questions. I'll do my best to address those. And of course, if you have insights, share them, because a high tide raises all boats. So what am I talking about here today, right? We've been waiting for a rally for a long time. And right now, Bitcoin finally making a move. And it's like we're approaching a level that has really I think carries a lot of weight. It's going to decide the direction of where things go from here, if we can even reach that level and break it, of course. The interesting thing is I think a lot of traders are looking at the wrong chart to really understand this. And so in a minute, I'm going to show you the chart that explains why this rally is happening, and kind of what's behind it, and the levels that are going to tell us whether it continues and how long it continues, or whether it's just going to completely fall apart. Now, before we look at that, we need to understand kind of the mechanics behind this move and how it started in the first place. And I'll show you that with some of the order book and order flow data. Of course, over the past couple of weeks, Bitcoin's been doing something that happens in bear markets. It's been chopping, and it's been shaking people out. We've been running through a range. We have been in a decisive bear market, but we get these little rallies, we get these little pumps, and everybody rushes to change their bias. And while I think conviction is important, I also think it's important that we don't get married to our bias, because let's face it, things can change pretty quick around here. So the consolidation that we've been in creates two things. It creates liquidity above the active price range, and it creates liquidity below the active price range. And when enough builds up, the market usually makes a move to hunt it. And we know the downside's been getting hunted quite a bit recently, and now maybe it's the upside's turn. So let me show you the chart that matters here. In terms of how this began today, I guess we can start on fire charts. And I want you to notice something that's going to be very distinctive for you here. I probably should go ahead and share that chart first. Let me just clean some stuff up here. Separate that, and I just closed the screen. That's not what I wanted to do. Let me let's see where this guy goes. There it is. All right. So let me go ahead and share the screen here. Sorry about that. I closed the tab that I actually needed to get to control this. So here we go. Here's a look at fire charts. Here's the daily view. We're kind of zoomed in because I wanted to show you something very, very distinctive here. I think it's glaringly obvious for those that are new to this. The binned CVD on fire charts is binned into order classes. with brown mega whales being the largest order class, $1 million to $10 million orders. Purple, 100, we call those whales as well, 100,000 to $1 million orders, and on down to the smallest order class of orange, which is $100 to $1,000 market orders. And you can see a huge, nearly vertical move here that happened this morning, actually in the twilight hours here for the U.S. time zone. And this is indicative, kind of has the fingerprints, if you will, of a TWAP strategy. For those who don't know what that is, it's a time-weighted average price. And what we saw here was just a massive vertical ascent here out of this order class. Sure, the other order classes were also buying into this, but really this orange class broke away with nearly, and we can see it here on the absolute value. If I adjust it here, we're talking about close to $40 million in less than 2 hours. All right, you can see here. So you look at that second line here in this little tag box. The first one is all orders. The second one is $100 to $1,000 orders. So we started out, basically net $500,000 in the red to the downside, and then in a matter of time, things started to grow, and they started to grow exponentially fast. Just watch the ticker here. 3 million, 3.5 million, 4 million, 5 million, 6 million, 11, 17, 18, 22, 27, 31, 37, $37 million in about 2 hours. And that obviously helped push through this very thin liquidity. I've been talking about this thin liquidity for a long time, for the better part of a week, right? It's been pretty thin in here. And so I've been talking about this, and here it finally did get exploited. I expected that to happen a little bit sooner. It didn't. Yesterday gave us a bit of another little shakeout through the range, if you will. And now obviously we're seeing things start to run here. As you can see, ask liquidity starting to stack here. This wasn't here before, right? Nothing attracts liquidity like price. So as you can see here, as price moved up, we saw liquidity move up as well. And so now we have a nice ladder of ask liquidity up here now, 75K on up to the 80K range. And if I zoom out further, we can see higher, right? So, well, I'm going to run out of data, it looks like, but let's see. So you can see this concentration. I can go back in a little bit. You can see that this initial concentration here laddered up to 80K, and beyond that, I gotta zoom out a little more to go beyond that. I guess I do need that 1-year chart. So beyond that, you can see where ask liquidity goes all the way up into that all-time high territory again. Yes, we'll get there again one day. I just don't necessarily expect that to be happening right now. So for the moment, you can see large concentration of ask liquidity right here, nearly 50 million at this range that we're approaching right now. And this is kind of the underlying activity of what's happening behind the candles, behind the structural chart. And now I want to show you what this looks like in terms of the structure. Okay. So as we discussed a couple times recently, we've engaged with this two main levels here, right? The most important one is this 2021 top at 69K. And it is a very important range because we spent 8 months consolidating in this range here. When did that happen? That happened, actually, are you ready for this? 2 years ago to the day, March 4th. Look at this. March 4th was the first time we came back to this level after the all-time high in 2021. It took 3 years to get back to this nearly. And March 4th, 2 years ago to the day, we came back to this level. And we flirted with it for a bit. We appeared to break out. It turned out to be a fake out. This was, of course, a new all-time high. It happened before the halving, and that screwed everybody up. And then things broke down. And we flirted with this level for 8 months until election day, and the Trump pump took us out here on November 5th. Boom. There it is. Now, we know that that entire move has retraced at this point. And so this is structurally a really important level on the chart because there's so much history, because it was a prior yearly, cycle top, and because we had all this consolidation here. If you recall, if you're an old school member of this stream, if you recall when we talked about it then, I said that we need to build this structural integrity, this foundation, so that when we come down, there's some place for price to land and consolidate and potentially bounce from. So we've exploited this a bit, right? Could this be the absolute bottom? Sure, it could be. Is it? Too soon to tell. And we're going to get into that here. So in addition to this level, this was the first things we really needed to see happen here. The rungs of the ladder to climb out of this bear market, if you will, started with reclaiming this 21-day moving average. And 1, 2, 3, 4, 5, 6, it's been a week of flirting with it and getting rejected time and time again. So in the twilight hours here, on US time, we reclaim this, and now we've also reclaimed for the moment the 2021 top. So those are the first two rungs of the ladder. And now let me introduce a few other rungs of the ladder that get us to where we really need to go. Let me turn on timescapes and let's look at what we have here. So we have the quarterly, second quarter of 2024, we had a timescape level here. This one was also significant. We had a lot of consolidation. Timescape levels mark an open for a period, right? And we're looking at quarterlies and yearlies. Yearlies, of course, a subset, or quarterlies being a subset of yearly, or however you want to look at it. Obviously, a yearly is is the first quarter, so it's also a quarterly. But you can see we had some prior structural support here, or resistance here, that turned into support. And we have another one not too far off. And there's, quite frankly, not a lot of technical resistance in between these two levels. We have the 50-day moving average, which sits at 76.5K-ish. And we have another 2025 timescape level here at 78.3. And these move up consecutively to 82K, which has some close confluence with the 100-day moving average. These are all, and when you have this kind of confluence, it makes the resistance or support, depending on where you are, where price is relative to it, but it makes it stronger. And so this, all of these levels have some strength to them. This is stronger. And of course, as we move up, what is the most important level on this chart, in my opinion? The most important one. So support here, obviously critical, but the level that we really have to flip to have the conversation about a potential recovery here, like this turning into a real, legit bull market recovery, would be reclaiming the yearly open. That's a timescape level here. You can see 1/1/2026, and that is at 87.5. Now let's add some strength to this level. This level, and it's the timescape line is going to disappear when I go to the weekly chart because of the time frame, but it has confluence with this 100-week moving average, making this very, very strong technical resistance. And then there's this guy right here. This is what concerns me the most about what we're seeing right now. I'm grateful for this candle right here. I've expected this for a long time. We expected, quite frankly, retests from all of these levels. We expected a retest of resistance here at the 50-week moving average. It never happened. We then expected a retest of these timescape levels, and we got one here to this 2025 timescape level, but we didn't get, as things broke down past this yearly open, we did not get a retest of this yearly timescape at 87.5. And so it's been expected ever since we lost it. It just hasn't happened. And so the death cross here between the 21 and the 50 obviously led to this cascade. And yes, this is a lagging indicator, but as you can see, the momentum continues when we see these death crosses. That's typically what happens. And it's why I expect to see another leg down after, and it may not go down further. It may just give us another support test. But once this happens, and my guess is here within the next week or two, we're going to see this downward momentum continue. Now, in terms of what we've seen historically, because we have seen this before, we've seen this show before, my friends. And I don't want to insinuate that it has to play out exactly as it has before, but it is very, very similar so far. And so that said, I don't want to get married to a bias. I don't want to get married to a narrative. Narratives, in fact, will screw you hard. They will. Hey, Alex, I see you, man. I'll get to you, and I'll get to your question in a second. I don't want to derail my train of thought. So narratives can mess you up, and if you recall, we had this invasion, this military action. Let's call it what it is. We had a freaking war start, thanks to President Trump, on over the weekend, Friday night, after hours, whatever, and the market opened on Monday really kind of unscathed to what was happening. In fact, pretty positively to what was happening in Iran. And the narrative quickly went to, oh, this is what Bitcoin was made for, right? And sure, that remains true. But the very next day, and when I say this is what Bitcoin was made for, it wasn't made for wars. It's made for, to be, well, just envision this. You're in a war zone, in a hotspot. Your sovereign currency has gone to next to zero, and you can't get to your bank account or your ATM machine, and you have no money. But if you have Bitcoin on a cold wallet, you could be a millionaire, or at least survive financially while you're in this political situation, this combat situation. And that's all true. And yes, that is one of the many beneficial use cases for Bitcoin. But the very next day, price reverted, and then that narrative went away. So, and now today it's back again, right? It's a flip-flop. So that's why I say be very careful about getting married to narratives, because the narratives can mislead you, right? You zoom out macro-wise, yes, they help give you context to what's happening in the market or what you expect to happen in the market. But following those narratives very closely, especially on low time frames, can really fuck up your portfolio. So be mindful of that. And today, of course, we're seeing, this beautiful green celery stick. We're at 7.5% on the day. But again, what's looming? We have this death cross looming. And I want to now zoom out to something that I think you might find interesting. I've highlighted some things for you recently that were very similar to what we've seen in prior cycles. Some of those things are the weekly RSI, which, as you can see, there's a few periods once per cycle where it has spent some time in oversold territory, and sometimes some extended time in oversold territory, as we saw back here in 2019, and we saw here again in 2022. And we've, of course, experiencing it now, and just literally in the past day or so, we're starting to see a recovery here this week of this RSI. And you see, I have this line here. We'll want to see to really have a recovery. We're going to want to see the weekly RSI close, not wicking above, but closing above this 41 range. And we'll also want to see price closing above the 50-week moving average. But we got to go one level at a time. And so, in terms of other similarities, we've got the death cross that we saw between the 21 and the 50 right here in 2026, and we had something very similar in 2022. We have this big wick down, a little bit of consolidation, and we have this big wick down and a little bit of consolidation. Green candle, and then a death cross between the blue and green 21 and 100 week moving averages, which are developing right before our eyes right here. And we saw what happened after that. That was a bad week. 22% to the downside. Not saying that we're going to have a 22% downside after this death cross. No telling how far it goes. Now, let me zoom in a little bit to the daily chart and show you something else that looks eerily similar to what we saw back in 2022. Again, this doesn't mean it's going to happen this way, but it would be foolish, in my opinion, to ignore this. Okay, so we saw the breakdown 2022. Let's see. And where is the candle I'm looking for? Where'd it go? I should have marked it. I want it before that. I thought I had. Oh, here we go. So, here's a big upside and a quick downside. And this is 7.5% up, and then one day of flat, and then 6% down, right? A full retrace. Here's what I'm looking for. Maybe. Again, when you have these fast moves, when you have big volatile candles that happen fast, they tend to retrace, and it doesn't matter what direction, right? Here was a big move. Here was a big move up, followed by a big move down. Here was a big move down, followed by a big move up. And so the faster these happen, the more likely they are, in my opinion, to retrace. So I'm always mindful of that. And, same thing here. Big move down, big move up. So the point being, this is happening pretty damn fast right now. And the faster these moves happen, the less durable they tend to be. And so I would love to see this continue. I absolutely would love to see us hit some of these key levels. I think it would be amazing if we have the chance to go retest resistance at any of these levels, especially if we can make it all the way up to the yearly open. This would be textbook and really be a defining moment for the market, right? This would be, in my opinion, the clearest indicator of bull or bear, clearest indicator of full bull market recovery versus bull trap. And that would be a retest of resistance here at this 87.5K level. If you start getting closes above this, full candle body closes above this, that's when you start getting excited about a potential full recovery that brings with it the weekly RSI above that 41 range, and eventually brings the weekly price above that 50-week moving average. And then we can start to unwind these moving averages, and we're off to the races, back to the bull market. Could that happen? Absolutely, it can happen. But again, we cannot ignore this and what historically happens when these death crosses form. And so that's my, in a nutshell, scenario. And that's what I'm watching. Now, if we get a close, again, this candle has, it's not where you start, it's where you finish. This candle has, on a weekly time frame, has 4 days to close. And if those closes happen above these levels that we've just reclaimed, and I guess we should zoom in and do that on the daily. If we get a close, for instance, today's close, if this close happens above this timescape level at 71.3, that's good. That keeps us in the game. It keeps us in the hunt to go after resistance here at the 50-week moving average and potentially this next timescape level, and so on and so forth. So we're looking to log these closes above these levels. Now, if things retrace, I get concerned, right? If we lose this level, that gives me concern that we're going to go back and retest this. And quite frankly, if we lose this, that's also a very clear indication of what's happening. So it's one level at a time. Absolutely. This is the line between sustaining and breakdown. And the yearly open is the line between a potential full bull recovery and this being a bull trap. So keep that in mind, in the back of your mind, as you watch this. So, like I said, we can't get married to our bias. We have to say, even though I have a lot of conviction over this situation right here, this death cross situation potentially bringing us, to another leg down, I cannot be married to that. I have to watch the charts. I have to allow the charts to dictate my decisions rather than let my bias influence my decisions, because anything can change. What kind of catalyst could get us out of this? Well, we have just as many catalysts that could break things down as we do that could break things out. And just off the top of my head, the two ones, the low-hanging fruit is a de-escalation of the situation in Iran, like freedom and identifying leadership that can lead that country in a free and democratic manner without trying to continue to fund terrorism around the world. But that's probably not going to happen in the next day or two. Let's be honest. The Clarity Act is another thing that's low-hanging fruit that should usher in a lot of new institutional flow. So with that, I'm going to go ahead and address some of your questions, guys. So I appreciate your patience and participation. Alex, good to have you with me as always. How about that total 2, total 3 chart? Something like that. I think you're referring to my Bitcoin dominance versus total 3 ES versus ETH dominance, stablecoin dominance, et cetera, et cetera. That's the one. And what that shows us, I was just talking to somebody about this the other day. It's one of the gauges I've been watching here is like every time, for example, stablecoin dominance approaches its all-time high, it reverts. And likewise, as Bitcoin dominance heads towards lower lows, it reverts. That doesn't last forever. Obviously, at some point in time, things can break down. Um, because we're in this quote unquote short term risk on period, and everything's rallying, including uh, including TradFi, which incidentally kills the narrative that poked up a couple of days ago, whether um, we were seeing, we had one day Bitcoin was rallying and TradFi was going down, and so instantly speculation. Hey, is money rotating out of equities into Bitcoin? Well, so much for that narrative, right? Because everything's moving together at this point. But you can see that these equities are also in structurally precarious areas, right? We have the S&P below the 50 and 20-day moving averages. We have the Dow Jones below the 20 and the 50 and dip below the 100 briefly, and you have the NASDAQ composite below the 50, below the 100, and now trying to reclaim the 20. And it flirted with the 200 here yesterday. So all markets are in a precarious situation. Bitcoin is staging an impressive rally today, but let's face it, it's more volatile than the other asset classes, or the other indexes. So that's expected. Back to what Alex was asking about this chart here. So you can see Bitcoin dominance reclaiming 59.7%. Total three. Alt's getting a little bit of a move here, but you know, you have to be very cautious about the alts you pick. I haven't actually looked at this here today. So let's take a look over at the global analysis on the MI dashboard and see what we have going on in terms of correlation and beta. We're now back to a divergence on the beta, but I want to see here what the correlation is between alts and BTC to see if we're correlated or anti-correlated at this point. And we're into another phase of fear, and about looks like overall we've got a mix, but some of these coins are 80% correlated, while others are not correlated at all. You can see the red is low correlation, and blue and purple is highly correlated. So a bit of a mix here, right? We're starting to see this divergence. We go through periods where everything is kind of moving together. We recently came off of kind of a capitulation phase for alts, and now we're seeing some recovery out of some of these assets. So that's pretty interesting. What else do we have here? ABSD, what do you think of high prices of oils? Seem no effect so far. It was expected that because of the situation in the Middle East that oil prices would spike, and so that's expected. I don't think that is, and I'm not a commodities trader, so maybe I'm not the best person to ask, but I did expect to see a significant rotation into oil because of that. And in terms of other commodities, gold, I haven't even looked to see what like gold is doing right now. Let's see if we can pop that up real quick. What is gold? I always forget the symbol. It's like XAU. XAU. That's interesting. So, obviously a pullback from its all-time high, um, staged a recovery, but had a bit of a breakdown here this week. So this is not surprising, right? Because like I said at the beginning of it, you're in a situation, say you're in a situation like Iran, and you can't get to your bank, your sovereign dollar has been devalued. You can't go transact in gold. You can't convert it, not very easily, anyways. And so Bitcoin is the superior asset, in my opinion. Um, but again, we have not seen the rotation into Bitcoin like a lot of people expected. Trader King, nice to have you with me, man. I appreciate all of you guys. I am going to leave you here with a parting shot of the order book, so we can see if anything has developed since we looked at it last. And so here's what we're keeping an eye on here, right? Let's keep an eye on the order flow. You can see that the massive TWAP has ended, and there's some profit taking happening out of that orange class at the moment. But it's the whales that I really want to pay attention to. And I mean, first of all, let me just make the distinction. This was not retail pumping $40 million in 2 hours, right? That's an institutional whale that is employing a TWAP bot. So those are whales just using different order classes. But I want to keep an eye, most especially on these purple and brown whales, and let's see what they do. Right now, if they start to give it all back, then obviously that's an indication that the momentum is running out. A little bit of concern here that we're thin liquidity below us, right? The range, 65K has, this gets you at this point below, if we lose 70K, if we lose 69K, we're back down in here. I don't think it matters, right? I don't think we go, okay, we're going to get another run at it. If 69K doesn't hold, I'd be very surprised if we get another run at it. But in the meantime, for the moment, whales are still buying, and we have resistance stacked at 75K, but it's not a ton. It's $12 million here on Binance. And so what we want to see is more bid liquidity moving into this range to keep price elevated. And we want to see whales continuing to buy here. So that's the long and short of what we're looking at. As you can see, price is kind of wedged in a no man's land between support and the next level of resistance, which is at 76 and change at the 50-day moving average, and then that timescape level at 78.3. I'd be thrilled if we made it up to this level. If we go higher than that, then that is really, really, really a gift to anybody who may have been trapped. And you have to decide whether you think that is going to carry on into a full recovery, or if you want to take your profits. This is the level I'm looking at again, just to wrap it, 87.5. If we can close above 87.5, 87.5K, you have a chance of this developing into a full recovery. Without that, the bear market continues with this looming death cross between the 100-week and 21-week moving averages that is going to form at the weekly open. Doesn't mean the cascade follows immediately after. Might take a week or two, but if we look at history, if history is our guide, then we have all seen what happens after these death crosses. Price continues to go down, and that happens every single time. 100% of the time that's happened, we've seen a cascade down. Be mindful of that. All right, guys, going to wrap it right there. Thanks again for the engagement. I appreciate you guys. Do I see, Alex has another question. Do I see Ask Liquidity at 82? Let's see what we see at 82. By the way, You too can see the Ask Liquidity for yourselves, guys. If you want insight on how to get these tools, you can find it at links are in the description, actually. So I won't even throw out the URL here, but you'll find links in the description. And if you want to talk shop all day long, every day, you can join us in our Telegram community. Link to that is also in the description down below. It's free. Would love to have you there and engage with you there. So Alex, as you can see here, not a lot of liquidity in that 82 range, but just like this wasn't here earlier today. Nothing attracts liquidity like price. So we'll be watching to see if, as price moves up, if price does indeed move above 80K, what we get at that 82 range. And let me ask you, what's your interest in that level? Why is 82 significant to you? I'd love to know. We have, see if we have any timescapes up there. No, it's kind of a void on the, oh, that's on the daily. Let's see on the weekly. I mean, on the daily. We do have, oh, I see. You have the 100-day moving average with confluence with the timescape here at 82, set about 82, 82.5, 82.4 to 82. Where's that? 83.2 is where the 100 is right now. So the 100-day moving average is at 83, just about 83 even right now. And we've got that timescape level at 82.5-ish. And so, you know, this is going to continue to move down over the next couple of days. And so we'll see how this all levels out. Oh, there's a CME gap in that area? Gotcha. Well, that's all the more reason to attract price up to this range. That would be phenomenal. I mean, like I said, I'd love to see price go all the way up to this 87.5 and let that be the proving ground for this market. It'd be incredible. All right, guys, I'm going to wrap it right there. Hope this has helped you out. Hope this has given you some insight to help you trade safer and trade smarter. Have a good one. We'll get back with you if I see things developing. You know, you'll find it on in the Telegram community first, typically, and also I'll post it on Twitter and on the CoinMarketCap pages. All right, guys. Thanks.